Templeton India Equity Income Fund. Equity portfolios can be broadly created in two different styles, value style and growth style. Value style. Here the portfolio consists of shares of fundamentally strong companies that are currently undervalued, with the expectation of benefiting from an increase in price as the market recognizes the true value. Value funds have relatively lower risk as the underlying portfolio has been purchased at low to medium valuations. They also require a longer investment horizon for the strategy to play out. Growth style. Here the portfolio consists of companies whose earnings are expected to grow at a rate higher than the average rate. They aim at providing above-average returns to investors in a bullish market. The volatility in returns of such funds is also relatively higher than value funds. Value investing. The best bargains are not stocks whose prices are down the most, but rather those stocks having the lowest prices in relation to possible earnings power in future years. Value investing is buying into businesses or stocks which are undervalued relative to their fair value. It is characterized by low investor expectations with the belief that, over the long term, the market will recognize their fair value and the stock price will rise. Stocks could be undervalued for various reasons, like the current value has depreciated due to exceptional circumstances. Stock has corrected due to a phase of market correction. Lack of interest in the respective sector. Company goes through a structural change. The three key traits of a value investor are not following the crowd, patience, and long-term view. Focus on fundamentals. Following the crowd will not give better performance than the crowd. This is very well represented by this chart. Sir John Templeton rightly said, "To buy when others are despondently selling and to sell when others are avidly buying requires the greatest fortitude and pays the greatest ultimate rewards." The importance of patience and a long-term view is beautifully represented by this chart. For example, the S&P BSE Sensex has risen almost 30 times over the last 25 years, but has seen various ups and downs during this journey. If one can withstand the volatility and stay invested for the long term, then there are potentially higher gains to be made. Lastly, a value investor focuses on the fundamentals. Since stock prices are always much more volatile than actual fundamentals, they may not always represent the long-term state of the company. This chart indicates that the fundamental value of a company is far less volatile than its stock price. Value investing challenges. There can be three key challenges related to value investing. Price discovery takes time. Price discovery can take a lot of time as a turnaround in certain stocks' fortune may take several years. Value traps. At times, the anticipated turnaround in a stock's fortune may never happen. Corporate governance issues. It may become difficult to uncover the hidden value of a business if its management starts acting dishonestly, taking advantage of poor corporate governance norms. Now that we understand value investing a little better, let's move to understanding a little more about Templeton India Equity Income Fund. This is an open-ended diversified equity fund that seeks to provide a combination of regular income and long-term capital appreciation. It follows a value-based style of investing to take advantage of investment opportunities across various markets. It invests in stocks of Indian and overseas companies that have current or potentially attractive dividend yield, which means higher dividends at a lower stock price. Investment in international stocks provides added diversification across geographies, besides companies and/or sectors. Ideal investment horizon. Since the Templeton India Equity Income Fund is an equity fund, we recommend an investment horizon of 5 years or more. Equity funds tend to display volatility over shorter time periods. But when one invests for longer periods of time, that volatility factor tends to get negated. Investment goals. Every investment you make must ideally be linked to a financial goal, and this goal could be of varied durations depending upon your investment needs. The fund is well placed as an option to consider while planning for your long-term financial goals, such as higher education, planning for your child's marriage, of building a retirement corpus, or even if you're seeking long-term wealth creation. Who should invest in this fund? The fund is well suited for investors with a moderately high-risk profile with a focus on dividend yield stocks across geographies, besides a value style of investing and a willingness to withstand volatility in the short to medium term. Investing in this product could be a good alternative to someone looking to directly identify and invest in potentially high dividend yield companies across different geographies. Tax benefits. Let's take a look at the tax benefits. Liquidity. You can redeem your investments in full or in part on any business day. The redemption amount is normally dispatched within 10 working days from the date of redemption. You could either receive this amount as a direct credit into your registered bank account or as a physical check which you can deposit into your registered bank account. Let's get to know some fund facts of the Templeton India Equity Income Fund. For more information, please feel free to contact your mutual fund distributor or registered investment advisor. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.